Well, as the title says, for this video, I'm going to be able to show you how you can be able to maximize your profits or your kind of results you can be able to see in the financial market. First, what I would like to state first is that this is not our financial advice. This is just education, financial education, how you can be able to reach out and maximize the profits you can be able to get in the market. So in this video, I'm going to show you two ways. Some two ways some financial analysts execute different trades to be able to get the most out of it and get more results compared to the normal 90% of the people who trade forex or crypto or any kind of asset in the financial market. So as in the previous videos, or before I go ahead in this video, right? Before I teach you how to be able to make more results in the market, this the kind of ways I'm going to show you actually depend on a number of things, and let me write them out real quick. Number one, one of the most important ones is experience. The more experience one has in the chart on seeing what's happening in the market, you can be able to see different patterns. You can be able to execute on and make better trades. The second one is risk management and understanding the kind of leverage available in your account. Of course, there are more things someone can be able to focus on in the market while executing trades. But for this video, I want to be able to just show you and describe to you what I mean. But we're going to mainly base it on this experience, risk management, and the leverage on the account. So let's give a normal scenario, right? In the previous video, I'll put a link at the end of this video. The first way someone can be able to maximize the kind of profits they see in the market, right? Imagine this is an uptrend, right? So we all know what an uptrend is. I'll put a link in the video in at the end of this video. So for one of the videos I made showing what an uptrend is, right? So imagine we have an uptrend happening in the market. Usually, a trader like you or I could come in the market and place one position. Our stop loss, our stop loss should be below the previous structure, and our take profit should go to the next higher high, right? So let's imagine this is the same scenario. This is a trade a person would take. He would buy from immediately the price starts to go up. A person would place his stop loss below the structure and the take profit to the next higher high. And of course, someone is using other indicators to actually execute on a trade, right? But now imagine someone does the same thing here, and instead of taking one entry, he's going to take two entries. The reason why I'm saying two entries is because of this. Let me make sure these are aligned. Yep. So instead of making one entry, one person is going to make two entries. The reason for this is the first entry he's going to make is going to be the kind of entry to only cover up for the stop loss. So it's going to be a one-to-one. By one-to-one, I mean he's going to risk 59.8 pips to make 59.8 pips when price goes in his direction. So this first take profit, this first entry right here, is going to be able to cover up for the loss in case price seems, instead of having to go up, this happens in the market, right? Price is going up in your direction. Because it's going up in your direction, then it reverses and sometimes can hit your stop loss, right? But in this situation, right, in case a person took two entries, right, price went in his direction first and it hit the first take profit. That means his stop loss is already covered for, and he's going to lose nothing since he has already made his first one. Let's say he's targeting 1% on this account on one trade, right? So he has made his first 1%, right? Let me delete this. Price is going up in his direction, right? Then price goes up. He's still feeling it. He's still feeling good. His first take profit is hit, but then price seemed to reverse, right? So that means the person's first take profit has been hit, right? But the second take profit wasn't hit for different reasons. Maybe it's news. Maybe it's a mistake while trying to read the chart one way or another, right? So in case this person has two entries, right? The first entry is going to be able to cover up for the loss, right? This is our first entry. Since remember he's risking 59.8 pips. So imagine he hits 59.8 pips in profit. This is our first one-to-one risk reward trade. Then we have our actual trade where we are risking 59.8 pips to make 162.8. That means we are going to make around 2%, around 3%. This is our actual trade, but actually it took two trades where the first trade actually covers up for the stop loss. That means he hasn't lost any money at all. Everybody knows normal math. 1 minus 1, that's 0%. That means he hasn't lost any money at all, right? The second way, I'm going to be able to show you how to maximize or to make more entries or better entries in the market to have more profits for yourself, right? So let's give the same scenario. It's an uptrend, right? We all know what an uptrend is. I'll put the video in the video, a link to one of the videos in the end, so you can be able to see what I'm talking about, right? Imagine this is an uptrend in the market, right? And someone decides to take a buy at this point. When price starts going up, he takes a buy, his first buying position. But remember, let's say price has hit a major support slash resistance area, right? And according to your readings, you are projecting price to actually go higher than that, higher than the next high, right? So someone makes an entry here. Then as price seems starts to go back up and it retraces back, it forms a retracement at the previous higher high that was formed, and places another entry and places another entry at the resistance that was being formed, and the stop loss is below the higher low that has been formed. See, he made one entry here, he made the second entry here. So price goes back up, then it retraces again. At the point of retracement, this is where someone is looking to make another entry. Number Remember, this someone's going to be able to see this more properly with experience and with enough exposure to the chart and risk and proper risk management. You're going as I've told you here, proper experience, risk management, and leverage. Understand those three, you'll be able to have better results in the market, right? So let's say price goes back up and it retraces again to the previous support slash resistance area, right? And he makes another entry at the same place, and his stop loss is right below the higher low that was formed, right? So in this scenario, right, number one, we can see that according to the first entry he made, he is supposed to be, he will be making 4%. Imagine I'm using 4% because we're imagining a person just risking 1% per trade on each of his trades, right? So the first entry has made 4%. Then the second entry he made, he's making around, for the second entry he made, he's making 3% off of this, right? Then for the last entry he made here, he's making 2.3. Let's say he's making 3%. He's making 3% on this entry, right? So from just one entry, a person has been able to make three other entries in this market, in the bullish market. Number one, he's following the trend, so everything is going in his direction. He's not going against the trend. Where is the arrow? Yep. The market is bullish, and he knows that during using his technical analysis, he can also add fundamental analysis. So the difference between technical and fundamental analysis is the kind of trading where one is using news to actually execute trades. While technical is someone just looking at charts and being able to execute according to what is available or being shown on the charts. So a person who is looking to just make 4% from this trade, right? He's going, at the end of the day, he has added 4 plus 3 plus 3 to his trading. So from just one trade, he has been able to make 10%. It's 4 plus 3 plus 3. He's been able to make 10% off of one trade, just one single trade. So let me delete this and show you practical examples of what I mean. So this is GBP I'm going to be using GBP to explain to you the two ways I've been able to show you how to be able to maximize your profits in the market. Oh, and a third note I would like to add is most people say risk only 1% on your trading account, right? In case an individual is only risking 1% on the trading account, and let's say a person is having $100,000 in his account, 1% of 100,000 is $1,000, right? Normal math, that makes sense, right? So let's give another scenario, right? In case one has an account of $100, right? 1% of $100 is $1. So a person being able to risk just 1% of $100,000 can get $1,000 from just one trade. So in case he makes 10%, he can make $10,000. But now imagine a person who has $100, right? And he is risking 1% of $100, which is $1 per trade. For a person who has been trading for a while, for over, let me say, 2 years, get risking $1, okay, risking 1% of a small amount of money like $150 does not make sense to me or to people who are experienced enough. It does not make sense. But someone who's able to have a huge access to huge amounts of capital, risking 1% to make that's $1,000 to make, let me say, 10%. That means he can be able to make $10,000. But in case someone makes 10% of $100, he will only be able to make $10, right? So my point here is, in case a person doesn't have access to enough capital and you have enough experience in the market, you know what risk management is, you know what leverage is. I would say try to use different prop firms, or find a way to be patient, work hard, work your ass off, and be able to get access to that huge amount of capital. So that when you risk 1% of an account and you make 3%, this is $3,000. Instead of having to make 3% of $100, which is $3, and you've been trading for a while. So first of all, let me say this again. This comes with experience. In case you have a small account, in case I have a small account of $100 right now, I can risk 20 to 30% or 50% of an account That's in case I'm very sure. That's in case I'm 100% sure of the trade I'm going to take in the market. When I'm 100% sure of a particular trade in the market, I can be able to risk 10 to 50% depending on what's in the market. But this comes with experience. And sometimes I can risk 1%. But when I'm dealing with a small account, I risk way more until I'm able to grow that account to a particular amount of money I am comfortable with. Then that's when I start to manage my risk properly. In case you understand my point, you'll be able to see what I'm talking about in the market. It's quite simple to understand, right? So let's go straight into the video, right? So I'm going to be using GPUSD my as my asset for this video, right? So in the beginning of the video, I told you let's draw our support slash resistance area, right? This is a major support slash resistance area because price had failed to actually break below here for a while. It tried to break below, tried to break below, tried to break below, but then after a while it dropped below. So it tried to break below it couldn't, tried to break, but it couldn't. So later on it actually broke. So when it broke this area, it had some resistance to go to the upside, as you can see here, right? So let's say, let me delete this. So let's say as a trader, right? I consider price has failed to break below here, and the candles being formed are not as strong. No candle is closing below here. That means more buyers are available in this area. So there is a higher chance that price actually going to come and break above and start a bullish uptrend, right? So as a trader, as a normal trader or as a usual trader, right? I'm going to come and place my yeah, as a normal trader, I'm going to come and place my buy. I'm going to buy from this point, right? I can use a buy stop or a sell stop or instant execution. So I'm going to buy from this point, and my take profit is going to be at the previous support slash resistance area, right? So according to this, I'm going to be risking 47 pips to make 141 pips. So I'm going to be getting 3% from this trade, right? But as I told you on the first way on how you can be able to maximize your profit, right? Oh, to maximize your profit basically, right? I'm going to take two entries in case I'm risking, depending on which account I'm using. I'm going to take two entries, two buy entries. The first entry here, the first entry is going to be the entry that is going to cover up my loss, and the second entry is the actual trade I'm actually going to execute on. So let's imagine price, instead of price having to go upwards, when I took this buy here, right? Imagine the price went upwards first. That means my first 1%. That means my 1% has been hit. My first trade has been hit, which is covering up for the loss, right? My first trade has been hit, and it continues to go in an upward direction, but it doesn't reach my support slash resistance and goes down instead. So the first entry has already taken care of my loss. So I'm in a risk-free trade. So I know I'm losing nothing at all, right? So let's go back to our entry, right? I've taken my first buy position from this point to the next support slash resistance area, right? So I've made instead of making 3% or 30%, depending on how much someone is risking, I'm making 3 plus 1. I'm making 4% on this trade. The first entry, which is covering up for the loss, which is the first 1%. Then I'm making another 3% here, which makes it 4. So remember I told you, depending on who you are, your experience, you can either risk 1% or you can risk 10%. In case you are crazy, you can go higher than that, like 80% or 50%, depending. In case you do understand what risk management is, leverage, you can be able to do all this, and all comes with experience, right? So that is the first kind of where I'm going to be able to maximize my profits in the market, right? My loss is taken care of, so I'm not risking anything. This is a risk-free trade. So price broke above this previous support slash resistance area, right? So it came above, and then it retraced, but it respected its support slash resistance area. That means we're only waiting for confirmation for this, for the next candles to become green to show us that's going to be an uptrend, right? So I'm going to place my buy in this position. My stop loss is going to be below the psychological level, which is the support slash resistance area, right? So for a normal trade, I would be, for how I trade, I'll be looking to take my take profit to the previous support slash resistance area. So let's say this is one support slash resistance area. According, we are looking to the left side to determine where our support slash resistance areas are, and my second is going to be here. Reason why I've drawn this second one is look here in the past, look here in the past, look here in the past. It was a substantial support slash resistance area, right? So I'm going to take my buy. My take profit is this and this. So I'm going to take a buy position here. Now this is going to be my target, right? Okay, let's start from the basis from what I've been able to show you, right? So the first trade I'm going to take is going to be a 1% trade. Why 1%? You don't know I even recommend the 1%. Look at this. So in case I buy in this area, the next area where price actually was resisted, right? The next area where price was resisted is at our actual take profit. No, is at our actual, the first, my 1% target is at the previous resistance area. So the chances of my 1% getting hit are way higher than having a higher or a support slash resistance or take profit that is far away. That means there's a higher chance that my first 1% is actually going to be hit, right? So that's our normal 1%, right? Let me adjust this a little. Yeah, so the 1% is going to take care of our risk, right? Then this is my actual trade. This is my actual trade. Two, my actual take profit is there, right? So in case you are patient enough, you can be able to wait so that your trade can actually come and hit this actual take profit you're looking for, 340 pips. So cool. I placed two buy entries, right? So price price goes up, forms are higher. It's an uptrend. We all know what an uptrend is. Forms a higher high, then it forms a higher low, right? So as a trader, this is what I do in the market when I'm going to execute, or I want to make more entries, or to have higher results in my trading. So price starts. So according to this, we are in an uptrend, right? As long as price stays above this previous support slash resistance, I know my trade is good. I'm not worried about anything. So price reaches the higher low. It forms a higher high, then it comes back to the higher low, and it's respected. Forms a higher high again, then it comes back to the higher low again. So as a trader, I'm going to be able to scale into this position because I know my high high is being respected, right? So I'm going to place my stop loss right below the previous support slash resistance area, right? This is our actual take profit. But as I told you before, I'm going to take two entries. The first entry is going to be able to cover up for the loss. Let me try and make this accurate as much as possible. I love accuracy. So the first, I'm going to take two entries, right? I told you the reason why I'm taking two entries. I'm trying to cover up for the loss so that I can have a risk-free trade, right? And more reason, this is going to be very easy for you to understand. The reason why I'm taking two entries, right? The first trade is going to cover up for the loss. Now, as you can see in this in on this setup too, this line this area was acting like a support and resistance area for a while, and it's my first target for the 1%. So I'm having risk-free trades. Listen, look at this. I'm having one risk-free trade here. My 1%, my loss was already taken care of. My second entry here, my loss has already been taken care of by my first take profit. Same as my loss is already being taken care of. And remember, our entry is right. Our actual take profit is here. So I'm looking to make 274 pips from this trade. So let's continue, right? So price forms the higher high as we've been waiting for, right? Then it forms a higher low. We are still in an uptrend. As long as structure is still being respected, we are going to do the same thing and go with the direction. We are not going against the direction, right? So price forms the higher low. Then the moment it forms a higher low, I'm looking to scale in. Remember, I want to make as much profit as possible in a particular trade. So as a trader, I'm going to come and place my buy, and my stop loss is going to be at the previous support/resistance area. I'm going to take two entries. The first entry is going to be able to take care of the loss, so that I'm in a risk-free trade. So let's clone this again. So I'm going to take, let's say, let me say I'm risking 2% per trade. The first trade takes care of the stop loss, and the second trade is moving to my take profit. Remember, all these trades are actually open. Starting from here to here, all these trades are actually open. It's only the trades that are taking care of the losses that are still open, that are being closed by the system. So I'm scaling in. I've scaled in once, twice, three times. These are risk-free trades. And price continues to go up in an uptrend. Then this was it was a major support/resistance area, but as long as it breaks it, that means my trade is actually is my that means my momentum, or the way I see the market, is actually more confirmed in this kind of scenario, right? So price actually breaks this support/resistance area from the past, right? So as a trader, I will decide to place another buy, and my take profit is still the same. I place a buy, and my stop loss is going to be below this support/resistance area. And as I told you before, I'm going to take two entries. The reason for the first entry is to take care of my loss, so that I am in risk-free trades. Yep. Let me make this more accurate. Yep. And according to this, I've taken two trades right now, and my loss has already been covered for by the first trade, and I let price to hit my actual trade. So imagine someone is using this kind of system to actually execute on different trades, right? And now let's look at this. On this first trade, I am making 1%. That is 1, right? You can see the 1 from the ratio here. I'm making 1 here. The second trade, I'm making almost 10. So 1 plus 10, that's 11. My target is 10, making a reward of 10 or 10%, whatever reward risk reward metric you want to use in your trading. Then the other trade, this that took care of the stop loss of the second entry, that's 1. That's 12%. 11 plus 1, that's 10, 12%. Now for this actual trade, this other trade, I'm making 8%. That's already 20% just from one setup. This other trade, this is 20 plus 1, 21%. This other trade, this is I'm making, according to this, I'll be able to make 4. So that is already 25%. This other trade, the first entry, which is taking care of the loss, this is going to be 25 plus 1, that's 26%. Then this other trade, the last trade I've taken, which is where I'm risking 22 pips to make 125. That's a reward of 5, right? So that's 26 plus 5, that's 31%. So from just one setup in this area, from just one setup, I've been able to make a reward of 31%. A reward of 31. I'm using percentages so that anybody can be able to understand. And reward, so depending on, I'm using percentages or reward so that you can be able to understand what I'm talking about. By reward, in case you're going to risk 1 and you expect to get 1 reward, that is 1 R. So for a person who's been risking 2%, because we've been able to scale in all the way from the beginning, I'm making a 31 reward on just one setup. So in case I'm having an account of $100,000, right, and I've been risking 2% per trade, not 1% but 2%, I already know I'm already making more than 31% on my account. And how long did this take? This took me 10 days to make 30. Yeah, let make it so simple. This took me 20 days to make $31,000 just from $100,000 on one account. Then usually, in case I'm dealing with a small account and I'm 100% sure of a setup, now like for this setup, I'm more than 100% sure on such setups, so I can risk more than 10% or more than 20% or just 20% per trade. So in case I'm risking 10% per trade, that means 31 31 times 10. 31 times 10. 31 by 10. That means I'm going to be making 310% off one account. So this is a way you can maximize the kind of entries you make in the market and to be able to see results in the forex market. This comes with understanding risk management, experience, and knowing the kind of leverage that is available for you in the market. And that this concludes this video. Like and subscribe in case you've gotten any kind of value. Share with your friends, those who want to make their trading better or improve their skill in the forex market, because this is a source of living for some people who are serious about it. As I said, like and subscribe. I'll put links to the videos of support and resistance in or at the end of the video. And yeah, see you at the next video. And you can check out my Instagram. I'm going to be more active on Instagram, posting different setups of the trades I'm taking, so that you can be able to learn from them and use them for your forex trading. Well, that's it for this video. Good luck.